Hey, this is Trent Cotney, CEO of Cotney Construction Law. I'm here with another Law and Mortar, and got a very interesting subject today. Today we're talking about tax advisory services for contractors, and I've got Jacqueline Feliciano with us. Jacqueline is a CGC, Certified General Contractor, has been so for 5 years. She has an LLM in tax from University of Florida, is fluent in Spanish. I think I got it.
Yeah.
So, we get all kinds of issues and stuff relating to buying and selling businesses, and it seems like the economy is real strong right now. There's a lot of companies out there, construction companies, that are looking to buy or sell, and when we're engaged in this process, one of the things that I've kind of seen from the high level view is that contractors really don't have a good appreciation or understanding of the tax implications. And they may have a bookkeeper or an accountant or somebody that's kind of assisting them, but they're not really thinking about the strategic tax advice that a tax lawyer can give. Why don't you talk a little bit about some of the kind of stuff that you do with our customers and kind of share with the audience some things to think about?
Yes. So thank you, Trent. So I think that when a contractor goes to purchase an entity, I think one of the biggest problems I see our clients run into is they don't know how to structure the transaction. So when you're structuring a transaction for an acquisition, there are 6 different types of ways, a few more, to structure this transaction. And so if you're just buying, for instance, the entity in its entirety, you can either buy it in a stock acquisition or an asset acquisition, and those have very different tax implications. Not to mention the assets. If you purchase it in an asset acquisition, those assets are assigned a value, and so if that value isn't assigned in the most tax efficient way, then you are not able to deduct those fees from your taxes, or it may be structured as a 30-year deduction, which of course we want to take our deductions as early as possible. So a tax attorney can help you structure that transaction and assign a value to assets in the most tax efficient way.
That's a great point, and one of the things that I say all the time is it's not what you know, it's what you don't know that's scary. And when you get into this kind of stuff, most construction companies aren't in the business of routinely buying and selling companies, and so a lot of this stuff is the first time they've done it. So I know enough to be dangerous, but I know if I've got real questions, I go to the expert, and she can help us out. One of the things that we also get a lot of questions about is buying and selling company trucks or company equipment, and there's a lot of different things that can be done from a tax perspective to help maximize your tax savings. Why don't you touch on that briefly?
So this is actually a very exciting new area because the tax code actually changed a little bit with the new Tax Act. So with the new Tax Act, originally you couldn't take bonus depreciation, which is basically just extra deductions in the year of purchase, for used equipment. Now you can. So now you can purchase used equipment, and you can take up to $1 million, give or take, in the first year. I know a lot of contractors get frustrated because in the first year they can't take the entire purchase price of the equipment. They have to depreciate it over a period of time, which again, we want cash flow. Because of the new Tax Act, now we can deduct the purchase of this equipment up to $1 million in the first year, which is a very big tax advantage for contractors.
Yeah, that's huge. And you and I have talked plenty of times. One of the great things that Jacqueline does is a lot of times she'll go in and just look at what a contractor's got going on. And if you're like me, you've got an accountant. I've got a CFO that is also a CPA, but they're not really tax advisors. They're more number crunchers, bookkeepers, that kind of stuff. And what I think you're really good at is sort of going in and kind of figuring out how do we best structure this to save money from a tax perspective. So that's great information. And for those of you that have more questions, feel free to give Jacqueline a call. She's a great resource. We're glad to have her. So what do we have coming up? Next week, I'm out in California. I might try to do something out there. I'm at the WSRCA board meetings. Then in September, we've got a lot going on. We're going to be in Denver. I'm going to be in California and Dallas again, so might take the show on the road. We'll be at Best of Success Conference towards the end of the month. As always, we appreciate you guys, and stay tuned for more Law and Mortar next time. Thanks.